Welcome to SpeedyPodz episode 10. Our mission today, well, it's a quick roundup, really, looking at the biggest stock market moves, the latest in business, especially through that lens of AI infrastructure growth. It's exploding.
It really is. And you're seeing these sort of two contrasting stories play out, aren't you? On
Yeah.
one hand, just almost unlimited money pouring into next-gen compute. But on the other, quite a bit of uncertainty, macroeconomic stuff, tariff headwinds, that kind of thing.
Definitely. And when you talk compute capital, you kind of have to start with Applied Digital, APLD. I mean, the stock's just been on a tear, up over, 370% year to date. It's pretty wild. And it's not just, like, random hype either.
No, there's substance.
Yeah.
The main catalyst, it seems, is that they're in pretty advanced talks with a major hyperscaler client, one of the really big cloud guys like Amazon, Google, Microsoft maybe, for their second data center campus up in North Dakota.
Right. So that just confirms the demand from the absolute biggest players is still incredibly strong, really driving these infrastructure providers.
And their numbers backed it up too, didn't they?
Yeah, the earnings surprise. They posted an adjusted loss of only 3 cents a share. Analysts were expecting 16 cents, so much, much better.
That's a significant beat. And it signals to investors, maybe that path to actually making money in AI infrastructure is, well, shorter than we thought, purely driven by that demand.
Right, just insatiable demand. But while that AI money's flowing, you see traditional markets getting squeezed a bit. Look at Levi Strauss, LEVI. Stock tumbled quite a bit.
Yeah, despite actually raising their full-year outlook, which is the strange part, fell sharply, maybe 12, 14%.
And management pointed the finger directly at tariffs. They warned they're now expecting like 30% tariffs in China. And they doubled their expectation for the rest of the world, too, up to 20%. That's a big jump from 10%.
Ouch. Yeah, that uncertainty hits hard. And it's not just retail, is it?
No, it's hitting basic industries, too. Mosaic, MOS, the fertilizer company.
Right. They saw a drop 7, 8% maybe.
Yeah.
They cited mechanical issues, utility interruptions cutting into phosphate production.
Yeah, but remember, they were already feeling pressure. Trade policy, specifically those U.S. tariffs, means farmers just have less money to spend, hits core demand for fertilizer.
It's a really interesting contrast, isn't it? Traditional companies facing these external economic breaks, while AI just gets fueled by this immense, maybe sometimes speculative capital.
Okay, so let's shift back to that AI build-out then, because the really big news was probably on the hardware side. That mega deal. AMD and OpenAI.
Ah, yes. The commitment for, 6 gigawatts worth of AMD's next-gen GPUs.
6 gigawatts. And that metric itself is the story, isn't it?
It absolutely is. This is where things have shifted, like fundamentally. We used to count chips, right? Have an H100s, NVIDIA's big chip. That was the scale indicator. Now, deals are measured in gigawatts. Power consumption.
So why the change? What does that tell us?
It tells you power and cooling are the real bottlenecks now. That's the constrained resource, not necessarily the silicon itself. It's not just about packing more transistors anymore.
So moving from counting units to counting essentially energy use, that signals a real physical limit, or at least a major hurdle in scaling AI further.
Exactly. And put that scale into perspective for you listening, some estimates suggest just one single 10-gigawatt data center. That could represent, a staggering investment, maybe $500 billion.
$500 billion for one data center. That's the kind of bet being placed here.
And all that capital is chasing capability, right? Like on the robotics frontier. We saw that pretty impressive demo from the Figure 03 robot this week, autonomous humanoid. The founder made a point of saying, nothing was remote controlled, no teleoperation in that video.
Yeah, that was cool. But the really surprising bit, for me anyway, reading about it, was a design thing. Apparently for household acceptance, the robot has this fabric layer design, like a shell that looks like clothing.
Huh, really? So user testing suggests we won't let robots in our house unless they're dressed.
Seems like it. The path to AGI acceptance involves appropriate kitchen attire, apparently.
Well, while the robots are getting dressed, the software keeps racing ahead too. GPT-5 Pro. It apparently edged out competitors like Grok 4 on that ARC AGI benchmark. It's a standard test for, general reasoning.
Okay, so it sets a new benchmark for commercially available models, at least. But, and this is a big but, the cost.
Oh, the cost is astronomical. Something like $478 per task. And that's on a logarithmic chart, mind you.
Wow. So that raises a huge question about economic viability, right? The capability might be there at the absolute peak, but it's reserved for only the highest value tasks right now. A big hurdle for using it, like, every day.
So pulling it all together. What does it mean? You see these massive investments in capacity building, the APLD data centers, these huge AMD deals, and at the same time, software adoption is accelerating. Something like 44% of U.S. businesses are now paying for AI tools.
Mm.
So the capacity is being built, and people are starting to use it.
Yeah, but the market, you still sense the skepticism about the big payoff, right? What's the killer app that justifies a $500 billion data center? A lot of money seems to be flowing based on, well, potential more than fully proven returns just yet.
Which leads us, I think, to a final, maybe provocative thought for you to consider. With this accelerating pace, both in AI capability and just the sheer capacity being built, are we maybe heading towards a kind of productivity revolution? One that could actually lead to a jobless recovery scenario, where, the labor market stays kind of cool, tempered, but overall productivity just skyrockets because of automation. Something to think about.